Great. I think we'll give folks a few more minutes before we begin. Another minute, maybe, because I know that we have had a lot of interest, over 130 registrations. Typically, we get a good number when people register for a focused webinar like this. All right, I think we're good to go. We are also going to be recording this for people that might not be able to join this early enough. Good morning, folks. Good evening and good afternoon to many others. I know that people have logged in from outside of India as well. Thank you for making the time and joining us today. Some of you might already know, we've recently partnered with the Terwilliger Center for Innovation in Shelter at Habitat for Humanity International. And we've created a special track dedicated to affordable housing as a result of this exciting collaboration. The partnership provides a comprehensive platform for affordable housing startups to work with, which includes the global deep domain expertise that TCIS brings, along with the proven track record of Brigade REAP, which is 5 years in the making, 50 plus prop tech startups and counting. Our guest today is Jyoti Patel. Jyoti is a senior director at Terwilliger Center for Innovation in Shelter and at Habitat for Humanity International. She is based out of Washington, DC. And today, Jyoti is going to be speaking about compelling opportunities for investors, innovators, and startups in the world of affordable housing. Welcome, Jyoti.
Thank you, Gautam.
And absolutely, pleasure to have you here with us. And with Jyoti, speaking to her today is Meera Shiva, also from TCIS. Meera has worn many hats, that of a business columnist, a chip designer, a community builder, besides also being a CFA. So she's a real polyglot. And Meera is going to be in conversation with Jyoti as the presentation moves along. Meera is based in Chennai. So before we begin this chat, a quick, housekeeping request to everyone. Please keep yourselves on mute till we hit the Q&A section about 60 to 75 minutes from now. You can ask your questions in the chat below, and we'll bring those in towards the end. Alternatively, if you'd like to ask a question on video, please raise your hand and let us know, and we'll bring you in at the appropriate time. So with that, please take it away, Meera.
Thank you, Gautam, for the great introduction. And, on behalf of the Terwilliger Center for Innovation in Shelter Habitat for Humanity, we are really happy to be partnering with the Brigade REAP in extending its PropTech accelerator program to also include affordable housing startups. As some of you may be aware, but I just want to say it for many people who may be new, that we have been working as an organization in the area of market-based solutions, and particularly with innovative new solutions, which will help low-income households have access to lower priced, better quality, and more choices of housing products and solution. And this partnership with Brigade is a part of that. And in the cohort 10, we do have some startups that are focusing on this affordable housing market. And Jyoti Patel, who happens to be in India, was kind enough to give us some time to talk about our Habitat's experience in making investments in the area of affordable housing, and in that context, various flavors of impact investment, be it debt, be it equity, and be it other instruments in between. So with that brief intro, I will hand over the floor to Jyoti. Over to you, Jyoti.
Gautam and Meera, thank you very much for that introduction. I was thinking that, as we go through this session, I want it to be very interactive and a little bit dynamic, So the lay of the land for today's webinar is that we'll give an overview of what impact investment means and why is Habitat doing it and why housing. Then we will also talk of examples of the investment funds that we at Habitat have, and then leave the floor for a lot of question and answers that you may have during the session. So with that, we dive deep into what impact investment is. So many of you may have learned or read about terms of what impact investment is, and it is presented under various terminology. We're looking at social responsibility, responsible investment, social impact bonds, divestment, venture philanthropy, program-related or mission-related investments. And when you talk of all these, basically what it is meaning is that impact investment field has been evolving, both from not just financial perspective, but also from mission and environmental perspective. So as the field grows, so is the nature of what impact investment means to a particular institution or those that are involved in this field means. So when you look at impact investment, the way in the general term, it is defined as investments that is made with the intention of generating positive, measurable, environmental, and social impact alongside financial returns. The Global Impact Investment Network, which is a US-based network that tracks the number of impact investments, has been doing this for a number of years, and you can see below how much the growth has happened in impact investment. It started with $114 billion, and it has almost quadrupled to $502 billion in less than 2 years, So the idea behind impact investment is to target either returns that are below the market, not necessarily, but oftentimes if that happens, then it is the trade-off is, or the offset is, a lot of social impact or environmental impact. And so when you look at the size of the growth of this market, nearly a quarter of all the assets that are managed or equivalent of, let's say, 13 trillion US dollars are now managed with sustainable principles, So it could be that asset management firms may have filters that they use in order to generate really social impact or environmental impact and so on. So who is making this impact investments? You are looking at development financial institutions. You may have heard of institutions like the Asian Development Bank, the International Finance Corporation, World Bank. Then there are, strategic country-based financial institutions that are focused on development. They're oftentimes supported by the government of that country. And those will be like the DFC, which is the US DFC. It is the Development Finance Corporation of the US. FMO is the Development Agency of the Netherlands. KfW is the Development Institution of Germany. Then there is the European Investment Bank. IADB is also focused on all countries within Latin America. So you'll see this plethora of development finance institution. You'll also see private foundations. Like in India, for example, the corporate financial, the corporates have created foundations like Infosys Foundation, there's Reliance Foundation. Azim Premji is doing a lot of work. in this area, and then there's Birla Foundation. But if you look at more global, very well-known ones, you will probably recognize the Bill and Melinda Gates Foundation, which is based out of the US. The Stichting Foundation is based out of the Netherlands. There's Ford Foundation, and so on. So many of the pension funds, I see a lot of them that are coming out of Europe are very much investing for the purpose of environmental, social, or governance impact. Then there are family office foundations and individual investors. NGOs like Habitat for Humanity, Mercy Corps, Global Partnership, Action, Catholic Relief Services, World Vision. These are all some of the names of NGOs. You'll see a lot more, even in India, that are focused. Some are focused on the arts, some are focused on education, even more drilled down towards education for women and girls. And so, you'll see some of these NGOs even in the Indian landscape. A lot more of equity and private venture partners are also entering this field because it is the right thing to do, And then there are diversified financial institutions and banks also who are making impact investments on behalf of their client, or dedicated donor advised funds. Moving on, why Habitat for Humanity? Why is Habitat involved in doing all this? Habitat started nearly over 40 years ago, and it has presence in over 70 countries worldwide. It started as a means to bring volunteer work in the affordable housing sector. In the US, it's predominantly working by building a home from scratch, one house at a time, raising this through volunteer work or support from Home Depot and Lowe's Foundation and other individuals that are working to bring more inclusivity in affordable housing for low-income families. So these houses are built through volunteer work, and they're underwritten typically like a mortgage would. A lot of the work that we are at Terwilliger Center doing is focused on the international area. In 2013, Habitat reached a major milestone by building 100,000 houses from ground up. But this, given the fact that 1.6 billion people live in inadequate shelter, is very difficult, a milestone to accomplish by assuming that, when we build these houses, we will be able to really bring or bridge the gap in affordable housing. So Habitat for Humanity did its strategy refresh. And in doing so, it wanted to really bring more market sector-based approaches towards bridging the gap of deficit in affordable housing. So the three-house strategy that Habitat looked at is, community impact by improving housing conditions, working with local governments and private sector actors. And then there is the build sector impact, whereby we work with private sector partners in bringing increased shelter access to low-income households, but also through policy and advocacy work. And then we want to really build societal impact. And through these three house strategies of Habitat for Humanity, we really want to bring more than 4 times the people that we serve otherwise. Our target market, as I mentioned, is low-income household. Look at the picture onto my left, but to your right probably. You're looking at these substandard, inadequate shelter, and especially in times of COVID, when we are asked to shelter in place. Imagine a house like this and the issues it can present. We are looking at the target market that we serve. They have hardly any access to electricity or services like access to water and sanitation. They are not waterproofed. They have poor quality construction because people really bring whatever means they have and construct in order to bring some decent or adequate livable house. What we are trying to do is to really bring transformation to the housing market that we served, which is full of low-income people. How are we doing this transformation? By providing access to capital, providing means and products, and working with firms that are able to downscale by bringing their products and services to these households, and really provide construction advice so that people can build, so that houses are disaster resilient and so on. Our goal is to be able to really bring all of the market actors, including financial institutions, into the ecosystem so that we are able to bring more holistic solutions to the target market that we serve. And how are we doing that? We believe that innovation is very critical to creating, mitigating the challenges in housing solutions. And, lot of regions across the globe, not just in India, you will see are trying to bring these innovations to fore so that we are able to provide better quality access to capital. How are we doing this? So we have several verticals along which we try to address this issue. So we have an innovation and entrepreneurship track or vertical where we hold shelter tech accelerators, which are a part of the global accelerators where we try and bring more promising, innovative entrepreneurs to the fold and try to work with them to develop solutions that target our market of low-income household. We also have a shelter venture fund. We'll talk about that in a bit more detail later on. So through the innovation and entrepreneurship, we are really targeting startups that are poised for growth and investment. Then there is the housing systems development, where we have the shelter venture labs. We work in 5 countries right now. And the idea is to really work with firms throughout these 5 countries to bring more housing systems-based market solution and development of products and services that we can help influence the behavior of companies as well as consumers and the construction workers. And then there is the financial capital, financial systems and capital, where we have the Microbial Fund, and then we have our Institute of Retail Housing Services. And so through all of these mechanisms, we are really trying to work with housing finance companies and regulators to expand access to products and services towards low-income households across the globe. So starting with Microbuild Fund. Microbuild Fund was one of the first flagship fund of the Terwilliger Center. We established this fund in 2012. Idea was to catalyze inclusive housing market, but why? When you look at microfinance institutions or the microfinance sector that has grown over the last 20 odd years, and it has really mushroomed, right? It has done a fantastic job of providing capital to families that did not have access to traditional banks or other means. However, these microfinance institutions were only focused on enterprise loans, or let's say small and medium medium loans, but these were not used towards other interventions like housing. Why so? Because these loans are smaller in size and shorter in term. And what we noticed as research was this, I think, was a research done by CGAP, which is a part of the World. They had done this research on housing. The microfinance institutions was that this was spread across 100 million customers across the globe incrementally as and when their cash flows allow them. We decided on create a dedicated fund, which is the Microbuild Fund. And the reason being, there were 3 main barriers. One barrier was access to long-term for institutions to tap to secure. People have lived for generations on that has been.
Hey, Jyoti, can you turn your video off? I think there is a.
And finally, most of these microfinance were sure.
Jyoti?
Sure.
Yeah.
I can turn the video off.
Your voice is breaking up a bit, Jyoti. Maybe you can turn off the video. Yeah, maybe that can help with that.
I apologize. Thank you for letting me know. It's hard for me to
so much better
to gather. I'm on a roll.
5 minutes.
Thank you. Can I repeat the 5 minutes from Microbuild Fund?
Yeah, like, from the middle, we could hear the first part, but along the way, it was getting worse by the minute. I thought it was just me.
Sincere apologies, everyone. So the reason why we started Microbuild Fund was manifold, but a research that was done by CGAP, which is the private sector research arm of the World Bank, found that of the $45 billion that were spread across customers across the group that are borrowed for micro. So it gave us an idea that why not build a dedicated investment vehicle that allows people to really access these funds. When we look at the barriers to housing or growing housing finance for low-income household or even these microfinance institutions, there were threefold. One is access to long-term capital. Most microfinance institutions are able to tap into capital, which is at most 24 months. But more importantly, there was lack of security of tenure, for generations, families that have lived on informal land, in slums or elsewhere, they don't have a formal title to build an asset on. And these are things that are required as a collateral. But more importantly, microfinance institutions lacked the means to grow a dedicated housing product because they did not have enough of a technical knowledge on building a dedicated product like housing finance. Mira, is this better? I'm going to pause here to make sure that
It's
you can hear. I apologize. There's a lot of construction going on around my home, So basically with that idea, we launched the Microbuild Fund in 2012 as a demonstration fund to demonstrate that a dedicated vehicle such as Microbuild Fund can both be scalable and financially viable. It is the first affordable housing sector of its kind across the globe. So this fund was launched with $100 million, which used a blended finance approach, using development finance, philanthropic capital, and then we used that to mobilize private capital. So this $100 million had Habitat commit $25 million, which included $10 million in dedicated technical assistance to provide technical assistance to microfinance institutions or housing finance companies or cooperatives that were accessing these loans. And then there was $10 million that Habitat committed as standby letters of credit as guarantee, because 90 million of this capital was provided from the US Development Finance Corporation as senior debt. So with this approach, we hope that by 2025, Microbuild will be able to directly improve shelter for more than 1.5 million low-income families across the globe. But our main idea is to catalyze enough capital to shift the microfinance institutions portfolio from 2% in housing to allocate that to 10% in housing. And you can see the support that we received below. We have MetLife Foundation and Umidyar Network that participated as equity capital providers. OPIC is now rebranded as the Development Finance Corporation of the US government. That provided us $90 million in senior debt. And you will see SCBF, which is the Swiss Capacity Building Facility. They provided us also additional capital in technical assistance. And then also similarly with Hilti Foundation and IKEA Foundation, they provided us capital to grow this fund. This fund is a closed-end fund. As a demonstration fund, it will fully wind down by June 2025. The idea is that, by this time, we would have demonstrated to the investing world, for potential investors, that housing microfinance can be a very viable option, whereby you can get financial returns and also really create a strong social impact by providing access to better shelter to families across the globe. So what is the fund's impact so far? This $100 million fund has allowed us to really disburse nearly $141 million to 55 institutions in 32 countries. I will talk about what this fund has also done in India in the next slide. But when you look at the overall renewals, plus whatever we have disbursed, the fund has reached 184 million in somewhat of a turnover. Now, imagine this. You have a pandemic that has been going on since last more than 18 months. In spite of that, this fund has done really well in terms of its outreach, but also in terms of how much more it has mobilized in term funding. So right now, as of June, we have nearly $1.05 billion of the microfinance institutions that we've funded that is dedicated to housing microfinance, which is about 11% of the investee portfolio. But more importantly, nearly 207,000 households have been impacted with access to better housing, which translates to nearly 1 million plus individuals. We talked about how the Terwilliger Center is interested in catalyzing the market. And when you talk of catalyzing, what we wanted to also demonstrate is that are we able to unlock additional capital, through funding and through advisory services that has been provided by Habitat for Humanity's Terwilliger Center. And what we notice is that as of date, nearly $436 million has been unlocked by microbuilt investee institutions to grow their portfolio. We can't talk about portfolio growth in isolation, right? We want to understand what is the portfolio at risk or how much of this portfolio is compromised, due to various factors, right? It could be macroeconomic factors or idiosyncratic factors that are very dedicated to the institutions themselves that have borrowed, but also a global pandemic that could impact the portfolio. What we notice is that when you have a dedicated product, you can mitigate the portfolio at risk. Our typical investee portfolio at risk is about 8%. In housing, it is almost 50% less. It is about 4.5% of portfolio is at risk for these investee institution. But this is an average number. Our investee institutions have had maybe under 1% to at most 6% in as a range in terms of portfolio at risk for housing. But what has this fund done in terms of its impact? Nearly 74% of the women that have borrowed are women, of the funds that have been borrowed are women. And then nearly 70% reside in the rural areas. And you see these numbers primarily coming from India and other countries like El Salvador, and where solidarity model is still very prevalent. What has Microbial done in India? As a global fund, we have invested in India since 2015, and we've disbursed nearly $9 million to 3 institutions. And you can see the names. Annapurna is based out of Odisha. Chaitanya is based in Karnataka. Interestingly enough, Chaitanya has a majority ownership now by Flipkart, which is one of the e-commerce business in India. And then there is a dedicated housing finance company called Ummeed, which is based out of New Delhi area. And this housing finance company is really providing access to housing finance to informal workers that do not have a proper means of income tax returns, or your typical kiosks that are operating at the corner of your street, or rickshawalas, taxi drivers, or dairy farmers that don't have a proper formal means to evidence that they are completely excluded from the traditional mortgage companies like HDFCs and others. So these are dedicated housing finance companies that have come up in India. You also may have heard the Prime Minister Awas Yojana, which talks of housing for all by 2022. As a result, there are so many of these housing finance companies that have come up that get credit or revolving facilities from the National Housing Bank of India. And so for us, we have one more in the pipeline. And so we hope that with this 1 million, we will grow our investment in India to nearly $12 million. Number of households that investee institutions in India have served is nearly 62,000, which translates to around 308,000 individuals, of which 79% are women and 84% reside in the rural areas. More importantly, what is very heartening to see is that nearly half of these investee portfolios is dedicated towards housing. And these institutions, these three institutions, have mobilized an additional $48 million to grow their housing product. Portfolio at risk is even lower than our average for the global. It's at 3.1%. Our dedicated team, which runs our technical advisory services, which is called Financial Inclusion and Capital Markets, FICM team, that is global. And this FICM team provides services, and it could include anything. It can start from doing research to understand the needs of the institution, develop a dedicated housing product from scratch. Or let's say if a company already has a housing product and it's not able to scale, we go in and understand the barriers to scale, and then we refine this product. More importantly, we really build the capacity of the institutions to do underwriting of a dedicated product like housing, because these loans are for much longer term. The average loans for these are like 4 years. And then these loans are on lent to customers, and their average tenor might be more than 3 years. So we try to help institutions understand the risk of underwriting a product like this. And so that also is a service that is a part of the advisory services that we provide through our FICM team, which is global. So this is the overview of Microbial Fund. Meera, I'm wondering whether we want to pause here because we are going to shift from access to finance to more like supply side of the impact investment. And I'm wondering whether we want to pause here for any questions.
Sure. Yeah, that sounds good. And actually also, I see Vaidya, who has joined and joined from the beginning. So maybe, Jyoti, we can have Vaidya add in a little bit more while we are on this slide on the work of Microbuild in India.
Absolutely.
And then, yeah, in the meantime, I'll request everyone to share the question either in the chat or, think of your question so you can unmute and ask them. Vaidya, any thoughts, inputs on Microbuild in India?
Hi, everyone. Can you hear me?
Yeah, we can, Vaidya. But we don't see you.
Sorry?
We hear you, but we don't see you.
Oh, okay. Let me switch on the video then. I think I have some problem with my video. I think, Meera, I have some problem with my video, I guess.
No worries. Yeah.
Yeah, so I don't know what to say, but we're a small version of Microbuild Global in India. We also do the same work what Microbuild Global does. In terms of impact, I think we have impacted about 3.5 lakh families. And in terms of investment, we have invested in about 25-30 odd housing microfinance companies in India spread across 12 states. So far, we have lent about 150 crores to these institutions, and these institutions on their own have invested about 800-900 crores for the housing microfinance space. So overall impact in terms of capital mobilized is almost about 1,000 crores. And as I said earlier, we have impacted about 3.5 lakh families in India. So this is our work in Microbuild India, where we specifically only concentrate on India. We also now, as per the regulation, we need to now diversify into retail, being the RBI directions. So we'll be now venturing out into retail space as well through the branch model. So this year we plan to open our own branches through the brick and mortar model, and serve the individuals for purchase or construction of new houses. That is what we plan to do. But however, we'll also continue to do the wholesale lending, which is lending to the microfinance institutions for them to on lend for housing microfinance. So this is what we do, Mira, in short.
Thank you, Vaidya. That brings a lot more country context also into view. Anyone with any questions for Jyoti on these, please feel free to unmute and ask her, put it in the chat. I had one question, we see you, Vaidya. I had one question for you, Jyoti. This was like way back in about slide 5 or so, where you listed the different kind of impact investors, right? And that was a wide gamut from family offices to the large DFIs and whatnot. If one is a startup or a investor, right, who is a fund, how do you pick who you want to partner with? Right? I mean, not everyone will come with the same goals or the same thought process. So can you give some more insights into how they all differ or how they are all similar?
That's such a relevant question, Meera, and thank you for raising it. I think it is all about mission alignment, So the reason why Omidyar partner with us is because Omidyar network has quite a bit of interest in land reforms, and some of these ideas, such as land reform and housing, are so intricate and so interconnected that you find mission-aligned investors, and that's what we have tried to do. We try to do that with all our funds, And another point that I wanted to raise is that in order for any fund to succeed, that is one critical aspect. If you have investors with very divergent view, then it will not be successful, So you have to really find investors that are aligned with you on that journey, whether it is a closed-end fund like Microbuild or open-ended fund like Microbuild India, that continue on, right? So I think important thing is to make sure that you find mission-aligned funders and investors and family offices also, so many of them now tied to list, right? So many of them are interested in climate finance and climate change mitigation. And so the idea is that you really partner with well-aligned goals in order to meet the fund's objective. Another thing that I wanted to add in to what Vaidya just said, when you have 90 million that is given to you by a large funder like the DFC, right? There are covenants, there are debt covenants that are restrictive in the sense that, and rightfully so, right? They want to make sure there is regional level limitation. There's, they put limitations on how much you can invest in one country so that the portfolio risk is really diversified, and how much in one investee and so on. Vaidya made a fantastic point. It's not just a small fund operating in India. For us, Microbuild India was allowing us to grow the Asia Pacific region, right? Because the fund is structured in a way that if one region does not grow, it will hamper the growth of another region because of these covenants, right? So let's say if Latin America was growing faster than Africa or the Middle East, then we want to make sure that we don't hamper the growth of Latin America, and which is one of the reasons why we entered Indian market, because in India, you have to, in order to do foreign direct investments, there were very many challenges, right? So Microbuild is a housing fund, and housing loans have to come through a different channel. In those days, in 2015, rules have changed since then. So, we could, because housing is not considered income generating loan, in spite of the fact that many borrowers actually also work out of their home. So we had to use a different vehicle like non-convertible debentures, then now the rules have changed and we are able to do foreign direct investment through other channels, but having said that, we can only bring maximum of $10 million or $12 million in India, because they would have reached the country limitation. Vaidya talked about having a dedicated fund, which works, because Microbuild as a demonstration fund will come in and exit, whereas something like Microbuild India, which is a perpetual entity, will be able to demonstrate or carry forward the work, in housing finance. Because India is it's a subcontinent, for us to be able to bring more than 20 million is even that still would not be sufficient for India, So yeah, to answer your first question, it is really finding investors who are also interested in what you are doing, and you target those investors when you start building a fund.
Right. So on this microbill, particularly the Indian context, there's a question in the chat from Shiva of Favu. He asks, like, how is it, looking at it from the retail end user of the funds point of view, right? Like, how is the funds dispersed? How is it repaid? And how is the approval process? And right, that whole view of the fund from the end user's perspective.
So for Microbuild Global or for Microbuild India?
I think it's more a global question, but
okay.
Maybe, the Indian context may be more specific, right, to because of the audience. Yeah.
Right. So Microbuild Global has a fund manager, which is based out of Netherlands. So they have many number of funds, and we build pipeline together. What we do as a part of our building of the pipeline is to understand whether this institution has, the investability criteria, right? You want to make sure that it is an institution that will be able to scale the product. We also assess them. Our FICUM team goes in and assesses the housing microfinance portion of it, meaning do they have a dedicated product? If not, can we build it? And is there management commitment? Because any new product that you build has to have the backing of senior management. Otherwise, it will fail miserably. So when we build the pipeline, we look at these two criteria, the housing assessment criteria as well as the investability criteria. When we build the pipeline, we also go and then present to, let's say, the Chaitanyas or the Annapurnas what this product can do. And then we sort of try and do a due diligence, which is on the ground. We also, our advisory team will also go in the field to understand. They will interview the borrowers. They will go to the branch to understand how these products are disseminated. They take into consideration the entire from the research part to the disbursement of the loan part, and they factor everything in and then provide a guidance or a recommendation that these are the areas that needs intervention, whether it is capacity building of the loan officers or the branch managers for housing, and also, or does the product need refinement? Then we continue to monitor and evaluate that product throughout the life of the loan, So all of this is factored in when we try to build the pipeline, and then we do a due diligence. It's presented to a third, a very independent investment committee that approves it. Microbuild its own independent board as well, so it's not just Habitat, it's experts from across the globe, that are expert in risk management and have done microfinance for their career or other aspects of impact investments, Did that answer your question, Meera, or is there any follow-up question?
Yeah, I think, the follow-up may be like, the whole process of the retail point of view, right? Like, which is, I guess, one step beyond what you do as Microbuild, right? Because, that's more the problem of Annapurna on how they manage the end customer relationship bit, right? Which,
right. So I'll give an example of Umeed, for example. It's a housing finance company that provides loans to informal earners. Imagine the risk, right? But what these housing finance companies have done is created an underwriting model, meaning they will look at a business for a long period of time. Let's say, I'm just giving an example, they will look at a Kirana shop, a vendor that provides household goods, grains and other things. Mm-hmm. And a loan officer actually looks at how much footfall that store has for a whole month. And then they will, understand what has been the income or revenue for a day, how much expenses, and then they understand what is the capacity of this end borrowing client of Umeed or Annapurna to repay this loan, right? and it is amortized. So then they come up with a model to see the cash flows, and based on that, what would be the EMI. Like that, they have, I think, Ummeed and other housing finance companies that are in the sector of affordable housing have probably done underwriting of 30 such products that they have standardized to ensure that they can do a quick turn around of loans that are requested by clients in the field, and the underwriting is done very quickly and the loan is disbursed very quickly. Now, most of the loans are amortized, so there is monthly payment. And insofar, even during the pandemic, we have worked with institution to restructure the loan so that if there are any violation of covenants, that we don't call them as breach, because I think because of the pandemic, there were more than 9 or 10 microfinance investment vehicle asset managers that came together to create a policy to ensure that the end client does not get compromised, and neither does the microfinance institution or cooperative or housing finance companies that are doing the lending. So the monitoring is taking place, but also at a bare minimum, our FICOM team will provide them with some sort of construction advisory, a brochure, on how to build well and how to, like, let's say, how do you install a roof or how do you lay a floor, to make sure, because most of the clients that borrow for housing, they tend to do self-build, they are owner-driven construction. They don't hire, or they may hire a mason that is also working on 10 other homes in the community, so yeah, this is the process. We interview the not just the institution, but also the clients. We understand their needs and preferences. We build a product that suits their requirement, rather than doing one size fits all. It's very customized based on the region, based on the country context.
That's a great point. You also mentioned on the COVID situation, right, which has created some stress for the lending institutions. So there's a question from Dante Perkins on any lessons. I guess it's a more broader question, but at this point we can address the micro build aspect of it from the pandemic, right? What were some learnings and adaptations that you had to do in this segment?
Thank you for that question. So I will give an example of Annapurna. Annapurna, we had 2 borrowers that we talked to. This is like we could talk to 10 borrowers or more, right? But we wanted to understand what happened. So many of these clients have renovated their homes so that they can build an extra structure they can rent out. So imagine in the pandemic, rental income was their only source of income. So similarly, a lot of clients that have borrowed, they also operate out of their home. So front of the house is a workplace and the back is a shelter. But industry-wide, we wanted to ensure that in the pandemic, we were not allowing, a large number of institutions have already they were very solvent already. But because of the pandemic, they had to focus on maintaining their portfolio rather than expanding, right? So they didn't do a lot of new loans. They just focused on managing the current portfolio. And in that portfolio, we wanted to make sure that those institutions that wanted extension on their loan, we provide them. So if the loan was due, let's say, June of last year, we would have given them extension, working with them to say, oh, do you need extension for 9 months or whatever period of time? But one critical aspect that I keep underscoring is that, this is a very dedicated product that we had structured within these institutions. So people don't want to lose their home, regardless of what situation they might be in, right? But this product has allowed them to, the idea of funding plus technical assistance has allowed them to ensure that they will do all they can so that they don't lose their home. But more importantly, from Microbial investee perspective, the institutions that have given these kind of loans, what they have noticed is that the portfolio at risk of these housing loans is much lower, almost 50% lower than the traditional product, because the product has performed very well and people have been able to, have an educate shelter, but also have a means to earn income through these educate shelter. And I'm not saying all of Microbial borrowers have a business running out of their home, right? Not everyone, but point being that they have been able to create educate shelter to educate their children, or even to work out of home or even rent out to somebody in need, so that it mitigates their income during these pandemic times.
No, that's quite interesting. The many other aspects of the housing, right? Not just a place to be, but income, livelihood, and then the money from it being used for other purposes like education and others. So it's quite interesting. So okay, so we are at 11:20. So why don't we move to the second part of the startup and shelter venture fund part, and then we can open up for more questions.
Meera, thank you so much. I just wanted to round this out to say, that especially for the investors, that, by providing these kind of long-term, large-size loans, Microbial has addressed the lack of housing finance option for low-income households, right? But because it has shown or demonstrated such a vehicle can really meet the vast housing demand and also generate positive returns for this sector that investors care about, not just the social aspect of it, but also the financial aspect of it. So far of this webinar, we focused on the access to demand for housing finance. We are going to switch the gears and we are going to talk about the supply side of housing. And so we delve into more the entrepreneur side, And so earlier in the presentation, I talked about entrepreneurship and innovation as one of the verticals within the Terwilliger Center. And why are we focusing on entrepreneurs? Because we believe that both entrepreneurship and innovation can go hand in hand. And innovation is really, really critical to solving the problems of affordable housing. And you'll see through examples of how we are working with entrepreneurs that are doing that on a regular basis, those that participate in the Shelter Tech Accelerator programs that we hold from the Terwilliger Center, but also those that are, like we source organically through other means. So when we are talking of entrepreneurs, what are we looking for? We want to ensure that the entrepreneurs that we want to bring into our fold care about shelter impact, they care about housing, they care about our target market, which is the low-income households. And we want a focus on shelter, whether it is just core housing like roofs or floors, but also access to services like access to electricity, water, sanitation, and also land rights. What do we look for? We look for minimum viable product. When we say minimum viable product, we want to make sure that this product has the ability to scale, not just like, oh, we innovate and then a year down the line the market is is not supporting this kind of innovation. We want to make sure that the entrepreneurs have done their homework for this product to succeed. We also look for commercially viable businesses. Why? Because I think in the end, regardless of the target market that you serve, you have to have a viable business. Otherwise, there's no point in innovation or bringing new products to the market if the business really does not have access to growth, which means we look for a proper business plan, kind of sales projections that point towards sustainability, that this business can be sustainable enough even after we exit the market, right? Or exit the investment. And then, of course, we look for entrepreneurs who are aspiring to scale and have a product that can scale so that, this becomes a commercially viable business in the end. How do we support entrepreneurs? We start with Shelter Tech Accelerators that we held across the globe in Mexico. We've done in India in 2019. We just concluded one in the ASEAN and the Andean regions. And there are all of these entrepreneurs that bring their innovation to these cohorts. We support them by providing catalytic grants, so that this catalytic grant can allow them to create a product if they haven't one already, and then allow it to kind of design and reshape and whatever it needs to do in order to be able to make it viable. We also provide mentorship to the entrepreneurs that are within the shelter venture realm. Through many means, we connect them to potential investors, other alumni within the Shelter Tech programs. We've created Knowledge Hub, and we've created community platform whereby these entrepreneurs can interact with each other and learn from each other to ensure that they are able to grow the product that is of interest to them, and is also support them in any other manner that we believe will help the entrepreneurs to really create an innovative, viable product. So what is the Shelter Venture Fund and why Habitat is doing it? Habitat for Humanity, with its many years of work in the housing sector and the industry, is uniquely positioned to create such a fund. But more importantly, there are not that many organizations that are pushing the entrepreneurs for innovation in housing. Internationally, there might be one-off projects, but there aren't that many vehicles or funds that are doing this on a consistent basis. You will see a lot more funds now going towards climate finance or gender finance or diversity, but housing, which is so interconnected, is somehow left of this realm, And for us, it is important that we focus our energy on pushing entrepreneurs into this particular sector. We also know from experience that startups can reach scale with both capital as well as technical assistance. And so we believe that with all of the programs that we've run so far, we are in a unique position to carry this forward. And then, we also allow participants or entrepreneurs to work in accelerators and access investment, either through the fund or even through connecting them with other investors in the market. So this is such a glaring picture that you see on your screen right now. This is a picture of a slum in Ahmedabad in Gujarat. This is a city in Western India. And when we talk of working with entrepreneurs, look at the possibility of transformation, right? So we started the Shelter Venture Fund with in 2017 with the idea of investing in entrepreneurs that are really promising, but also working with disruptive and an innovative solution. And when I say disruptive, the reason being that when you look at the tin sheet roof on the picture on the top, for a number of years, the manufacturers of this tin sheet roof have not bothered to innovate, because in their mind, they think, well, this is what we give to poor people and this is what poor people can afford. But what they have not figured out is that the poor people that are housed under these roofs have the ability to access capital through microfinance institutions, through other means, through their own savings. And this is where I think the traditional market or the commercial market has failed the people. So in comes an entrepreneur who's really creating this disruption by creating a modular roof. How is it so we are saying, well, if an entrepreneur can provide both an innovative product and service for affordable housing, that's our objective. So we really focus on those kind of entrepreneurs. And then within the Shelter Venture Fund and through the Shelter Venture Fund, we want to accelerate an entrepreneur's pathway to reaching our target market and create significant impact. The roof that you see is, and I'll talk about it in the next few slides, is an entrepreneur that has created this modular roofing using recyclable materials that is now, being used across many houses in Ahmedabad and elsewhere in India. So to give you a snapshot of where the Shelter Venture Fund is, since starting in 2017, we have funded 11 startups with $3 million in 7 countries. Our average investment can range from $50,000 to $500,000. The average size of this portfolio is about $272,000. Our focus is global, obviously. And we have, as a rule, we want to really allocate 60% of our portfolio in core housing and 40% to services like water, sanitation, clean energy, other things like solar heaters and whatnot. You see the top, you'll see a picture is one of a sewage treatment plant. That is one of our investee that uses biomimicry to treat sewage water. So imagine the possibilities of providing access to clean water through these mechanisms. And at the bottom of the slide, you will see the very first 3D printed home in India. That received Catalytic Grant from us as one of the grants to build this home. Some of the innovative solutions you can see, clean cook stoves and land documentation. We talked about really addressing the entire disruptions along the housing value chain. Land documentation is one of the ones that we've done recently that really addresses around formalizing land title in Africa and elsewhere in the world. So these are the kind of innovative solutions that we have funded so far. The investment instruments that we use vary depending on the need of the entrepreneurs, So it could be anything. It could be senior debt. It can be a recoverable grant. We've used investment instruments like equity-like instruments like SAFE, the simple agreement for future equity. We've also invested via equity, either ordinary or preferred. We've invested recently with a compulsorily convertible debenture. We've also used convertible note, which is one of the most popular way to invest in startups. As I mentioned earlier, our range includes 50,000 to half a million. We are now increasing that range to 100K to ensure that we have, sufficient means to provide to an entrepreneur to grow. Depending on the instruments, we kind of give them a term of 2 years to 5 years. We are managing unlike the Microbial Fund, which is managed by a third-party fund manager, Triple Jump in Netherlands. This particular fund is being managed within the Terwilliger Center. So right now, the deal turnaround can be anywhere between 3 months to 9 months. We start with understanding the entrepreneur and their business model, and if it fits within our fund mandate and the shelter focus, then we start with term sheet negotiations. We conduct an on-site due diligence. Then we have an investment committee. We draft the definitive legal documents, and then we finally fund. And the complexity of the transaction will mean whatever number of months it will take, but we've seen anywhere between 1 month to typically around 9 months to fund from the time we've started the negotiations to the funding. Shelter Venture Fund is really focused on early stage companies or round A, Series A companies, because we are not funding the concept stage. We are really interested in ensuring that there is at least a commercial sale by an entrepreneur, and that a proof of and established, and that team, it has a product that we believe will be able to scale through other means within the organization. We don't expect them to have a legal team and a full finance team and whatnot, but we want to ensure that they have the ability to provide us with data on sales and profitability and other financial statements to ensure that we are able to monitor the company, and we are able to provide them adequate mentorship so that any roadblocks the entrepreneurs encounter can be mitigated early on in the investments life. So far, we have invested, as I said, 11 companies. We've had one exit with My Strong Home, which is based out of the US. It is a company that built roofing and paired it with insurance as a part of disaster resilient home improvement in the coastal areas of the United States. But other than that, we have almost all of the companies in our portfolio. And again, despite the pandemic and the havoc it has wreaked, none of our companies have failed so far. And that is a testament to the kind of products these entrepreneurs have built, but also the resiliency of the entrepreneurs themselves. And I think, Meera, this is it at the end of the Shelter Venture Fund, and we can open up for questions?
Thank you, Jyoti. So there was, already a question on the side on if one is an entrepreneur, what would you suggest them as to what may be the right time to approach the fund?
That is a tough one, Meera. Uh, and please compliment it when you say this. So I think as I said, when an entrepreneur is looking for funds, you want to make sure that you have a product that you believe in, right? That product has longevity. Addressing what is this product? What is the competitive advantage of this product versus what is available in the market? Do you believe in this product that it will scale sufficiently? And have you done enough of your research and homework? I mentioned the Mod Roof company. Let me bring this up. Rematerials is this company that did the roofing, right?
Mm-hmm.
Hasit had done, and Hasit, if he's on the call, we may call on him as well. This entrepreneur did 300 experimentation before he got the mixture right of how much pulp to use from the recycled board, how much coconut fiber to use, and what kind of agent do I need to bind it so that this roof will last for more than 10 years. The whole idea behind this roofing was that it would be a roof in a box, right? And so when Hasid did this, he did 300 attempts, Meera, before he got the product right. So what I'm trying to say is that you cannot give up early on in the process, right? And you can only go to a funder when you really, really believe that this product is something that I can grow and I can scale, and it is addressing the market that nobody does so far, right? And it has to be transformational. And I don't mean like digital transformation, right? We are talking of affordable housing here. It has to be transformational in that it is really disrupting the market of these tin sheet roofs, right? Because the understanding is that people cannot afford it, but you have to do your homework right. And you have to understand what is your target market going to be. And we don't so for example, when we invest in Shelter Venture Fund, we want to really understand the low income household and what are their income levels, right? For them to be able to afford this product. But we don't say that, oh, you have to let's say we've invested in Twasta, the 3D printing company. We want them to also downscale. We want also them to adapt their technology to build homes that will house many low income households that have the capacity and the ability to pay for such a home, through other means like borrowing from housing finance companies and others, because the problem is so mammoth that you have to figure out the technology, whether it's going to work, how disruptive, how innovative it is. I know these sometimes sounds like buzzwords, right? But what I really want to tell you is that they are not. Look at the one with the biomimicry, right? This problem was lakes that were burning in the city of Bangalore. And this entrepreneur thought of a product that is going to really allow the release of clean water into the lake and prevent the effluents that could take up access to clean water, someday for the residents of Bangalore. Imagine such a technology can be brought to other part of the globe. So everything that we are also doing can be scalable, not just within India, but with other countries in the world, So you have to have that vision. You have to have that kind of power, or as I say, fire in your belly to be able to say, do not just want to do this in India. Even India is a big market itself. But point being that imagine these issues are prevalent in every emerging countries in the world. And imagine the ability to bring such transformation of your product and service to other parts of the world. And so I think when you do that kind of a homework, that introspection of what this product is, how competitively I can place it, in the market, because there are so many startups, Meera, that are coming up, right? And of course, each one of them believes in themselves and the product. But how do you separate the wheat from the chaff, right? How do you separate those innovations that are really going to be transformational, to our environment, to our planet, to the people that we profess to serve,
So yeah, that's quite helpful, Jyoti, because you're saying that the startup should be first clear on its value proposition, right? And
Absolutely.
how it is not just an incremental little bit, but is going to actually the before and after picture, as you show in that visual, should look very different. And right, one must be able to visualize it and sort of demonstrate it to the fund as a starting point, right? And of course all the other things that you shared on the business plan and the stage where they are and all of that stuff. So that's I mean, yeah, there is probably not just one answer, but that's a good starting point for people. And one question I had,
Meera, we don't look for elevator pitch.
Correct,
We don't. I mean, that's not something we are looking for. We are really looking for something that is transformational.
right. So if one is an impact investor, right, and then maybe an angel investor or a seed stage, or or even a series A kind of non-impact investor, right? So how would they look at an investment versus the fund? And or when you do co-investing, how have things worked out there?
Sure. I think, again, mission alignment, right? So we invested in this company called Landmap Meridia. It is a digital land titling company that uses geolocations and technology to map land, which is like with even like 1/4 centimeters accuracy, how did we invest in this company with other investors? We invested this with Mercy Corps and Omidyar Network. Again, mission alignment, right? We are focused. All of us are impact first investors, so we are not just saying, oh, obviously we want the company to be profitable, otherwise it will fold, right? So we are not saying that the startups focus should not be on sustainability. Of course, we want it to be sustainable, but also what kind of impact it is generating. So when we look at other investors, we are really looking at investors that believe in the mission of the company and also are very well aligned. In the event, let's say there's a mission drift, we have enough of documentation in our in our contract that allows us to exit the investment. So let's say if the company is completely diverging from what we initially invested in, and we want them to grow, it's just that we are not going to go on that journey with those startups or companies, we will be able to exit the investment. And all of this is done in a very meaningful way by drafting documents that address these kind of issues, But more or less, Meera, again, it's all about not just the value proposition, but also the mission alignment of the co-investors,
Thanks, Jyoti. Yeah, I think, for other investors also, right? I mean, it just has to align with what they do. And yeah, definitely this exit clause, because startups, they are very early in their life cycle, right? Because, when they may be like 3 years old, maybe 5 years old at the max. And then and the market also may change, right? Because they are trying to go with a theory, right, of change, to say, I think this is how things will move, and this is how I would play, and when things do move, yeah, they may also change. So that's good. So there is one question which is not quite on the startups, from Mary, on how, the point made is that to change the whole system, right? I mean, it requires a lot of players, and you require innovation beyond a product. For example, she notes that affordable housing institutions should want to bring to market a set of innovations and then develop themselves to a set, sustainable long-term institutions, right? So, it's just, there is also the institution building beyond the product building and support for the products, and the institution building bit takes long term, and large scale support is also needed. So the question is on how does I guess Terwilliger Center or maybe even the Shelter Venture Fund and the Microbial Fund look at that aspect, and how do they work with institutions to do that?
You mean the final institution or the other investors? Sorry.
So yeah, this not exactly focused on investors, but like the ecosystem, right? You know, that beyond the product, the ecosystem also needs to be supportive and right, change to be able to be supportive of these products and solutions, right? Like, you know, like how Microbial Fund enabled microfinance institutions to look at housing finance, right? And
Correct.
you know, for example, one aspect may be, do you work with institutions to promote funding to innovative products, right? Like, you know, that sort of thing, right? Like, so how do you make the other players in the market also be supportive?
It's fascinating, right? The ecosystem is inundated with so many players. I'll give you some examples, and I hope that brings some relevance to the question that was asked. It is important, right? I don't think that Habitat would have entered the housing microfinance sector without first, doing its homework on what challenges there were and why microfinance institutions were not promoting housing and only focused on micro enterprise loans. There are so many levels, right? I think a lot of people just, even microfinance institutions, do not innovate because why break something why disrupt something that is not broken, right? Like why, like this whole chain of providing money and getting money to micro entrepreneurs is working smoothly. Why mess with the model that is working, right? But they have to really also try to change their mindset to say that there are requirements beyond funding. People don't just borrow for entrepreneurial purposes to grow their micro enterprise business. They want access to house, they want access to water and sanitation and education, and which is why you see these dedicated funds that are being brought in the market. Even education fund, for example, or water fund, water.org is doing such a fabulous job in this area. And then sanitation. When we talk of affordable housing and the ecosystem itself, there are many challenges. It's not just that the microfinance institutions themselves, when you bring technical advisory services, will somehow wake up the next day and say, oh, I think I've got it and I'm going to build a housing microfinance product. Governance is woefully lacking in some parts of the world. So when you bring a product to, let's say, an institution, they're very excited, but they don't have the stomach to see through the completion. So imagine bringing a product to an institution and the management is all agreeable. You are spending nearly $100,000 or $150,000 to develop the product, but then you need a product champion at the institution to be able to let it move beyond the development phase, to the expansion phase. And for that, just us coming and intervening with technical advisory services simply won't work. You need to have that kind of management commitment and governance around it. We also, so one of the challenges that we faced when we were starting Microbuild was the prohibitively expensive hedging costs. So we not place a lot of loans in many parts of the world because hedging costs can become very expensive in terms of pricing the loan. So we instead started an internal mechanism where we would create a sub-portfolio of exotic currency loans that we manage ourselves, because, if you look at the correlation between emerging markets, although we are very integrated now, what happens in El Salvador will not necessarily impact Manila, It may these days because we are much more integrated than what we were 25 years ago. But point being that when you create these matrices of currencies that are very limited correlation or zero correlation or negative correlation, then we were able to create this portfolio of exotic currencies and manage it ourselves rather than going to a formal hedge provider in the market that would really make the price of the loan unaffordable for the borrowing institution, because these loans then, the pricing then cascades down to the end borrower, right? So this is how we mitigate it. But there are macroeconomic aspects that is so hard to overcome. We funded 55 institutions in Microbuild. The 4 loans that we believe that became problem loan and repaid were mostly all due to not credit failures, but more macroeconomic failures. Look at what is happening in Lebanon. So when a country really crashes, its government crashes, it has a very downward impact on all the institutions, and the most vulnerable are these microfinance institutions or NGOs or cooperatives. I'm not sure if I'm answering your question in the way somebody had hoped to achieve, that the ecosystem itself needs like a cohesive approach at every aspect of lending, of managing the portfolio, bringing the investors, but also expanding at the level of microfinance institutions themselves. There are so many, but it all boils down in the end to commitment, from the investors, from the institutions that are borrowing, and from the borrowers who are the end borrowers after all.
Right. I mean, the short answer may be that, it is a large problem, which you are aware of, and right, trying to work with this, right? That the need for support for these institutions also to come up, right? Also to scale up, right? To support and take on the challenge. Yeah. So there's a question from a startup. I'll probably let Kunjpreet ask the question herself rather than me reading it out. Can you do that, or you want me to do it? Give a minute, Kunjpreet.
Hello, ma'am.
Hi.
Can you hear me?
Yes, we
Hi.
can.
I know we had a discussion with you, but just wanted to know since you brought up this 3D house and biomimicry startup, just wanted to know like if startup like a shelter tech or a habitat can help startups to do fund for R&D and for build proof of concept. Is there any fund available with or can support in getting that fund for R&D?
Jyoti, want to take that?
So I think we do have catalytic grant, but again, we have to make sure that it aligns well with our focus. Kunjpreet,
Yeah. Okay.
We talked about shelter focus, right? So our focus is really on housing and housing related services, So if it is something that, if the product is something that, aligns with our shelter focus, then we are certainly happy to look at it. It's very hard for me to answer,
Okay.
like what kind of catalytic grants we give, it's and how much without assessing the entrepreneur and the companies and other aspects.
Okay, ma'am.
Bottom line is shelter focus has to be paramount.
Okay, got it. I think we can discuss this offline and see if our startup align with your portfolio.
Right. Yeah. I'll just add to what Jyoti said, right? Like, so in the India context, we have been running the Catalytic Grant program since 2019, and we have been supporting startups that have, a little bit in the R&D. It's not like very early stage R&D, but kind of this being the classic example, right? The first 3D printed home. It's not something that is a little R&D that you can do in the lab or right in your garage, right? I mean, this is stuff that requires a bit of capital outlay and a lot of support and multiple, I guess, technology and mentoring support that is needed, right? So the Catalytic Fund grants try to give the funds required. It's up to 25,000 US dollars, and it's a project focus, so it's not like okay, go do something kind of focus, but it's more like what is the thing you want to do, how long will it take, how will the money be spent, right? So there's a proper sort of proposal that is given, and then we evaluate it on, as Jyoti pointed out, how does it align to our end user, right? I mean, do we see a pathway of this product or the service that you're solution that you're building, how will it be able to make things better for the low income housing segment, right? It need not do it on day one, but we just want to see the pathway towards it, and then we evaluate the proposal on it and give the fund, right? So one was this 3D printed home, and we have given funds to build to test out this Medicab, which was like a modular solution to put up health infrastructure, right? It's like a clinics that you can put up in like a few hours, even in remote places, because it's done in the factory and just installed on site. So they were working on other like housing and other disaster solutions, you know, disaster management solutions in the past. And when COVID came, they shifted to this, and then we supported them to do this pilot on, okay, build this Medicab, let's test it out. And you know, we help them also find a customer who will take this and run this health infrastructure, right? Because it's not about building it and like we can't leave it in a parking lot and go off, right? Like how is it used, what is it? So we help them find that partner who will take this and run it, which was, you know, a government partner. And on the basis of this, they were able to get a lot more orders in the last 1 year. You know, they've seen like great growth for the product. So we do support with funds, with, you know, things beyond funds as well, for R&D, right? But it's a more focused R&D than, you know, just working in the lab.
Okay, got it, ma'am. Thank you so much for clearing this.
Yeah, sure.
But I'll definitely like to discuss this with you. We can do some pilot project.
Yeah.
Thank you, ma'am.
Sure. Okay, so we have a question from Shiva. Shiva, why don't you unmute and ask it yourself?
Are you able to hear me?
Yeah, we can.
Yeah. So my question is, so yeah, I mean, most of the startups where their product is, they have multiple customer segments where the same product can serve. Say, for example, in your portfolio companies, the modular roofing can also be used in the slums, or can also be used on a factory. Same goes with the 3D printing. Whereas Shelter Tech Fund is more focused on affordable housing, and you have very set of, you know, goals that you want to meet. So how does Shelter Tech Venture Fund approach these kind of startups? So where they have multiple customer segments, where one of the customer segment is affordable housing. I mean, is there any specific metrics that you measure to, you know, make a final call or anything of that sort?
So, Shiva, thank you for that question. We do measure, we do have specific metrics that we have based on each intervention, you know. So you rightfully mentioned that, yeah, a modular roof can be used on a house or it can be used in a factory. But our purpose is like for the purpose of Shelter Venture Fund, we do collect metrics on how many minimum number of households have acquired the roof, right? So we don't say that the entrepreneur cannot build roof for a factory, but for us, we do have a certain criteria based on number of families, because that was also the goal of the entrepreneur. Now, once in a while, you have indication of interest on doing a roof for a factory or even a school or a hospital. We do not discourage the entrepreneur, you know, so long as our minimum criteria have met, because in the end, the entrepreneur also wants to scale, right? And the scaling can be accomplished through many different channels, and one of them is through the households, but others could be commercial. Now imagine, Shiva, Rematerials built a roof for a school in a slum. Certainly we consider that great, because the school children don't have often access to decent schools and even a proper infrastructure. So for us, we don't discourage that. We encourage the entrepreneur to do even work that could lead to building a roofing for a school or a slum.
Yeah, got
And yes, we collect
it.
metrics for all
Yeah,
our entrepreneurs, but one underlying one is the one that talks about how many um,
hmm,
low-income families we have served
yeah, got it. Thank you so
through
much.
these interventions.
Yeah, understood.
Thank you.
Thank you.
Okay, so we had a question which I kind of moved over to, right, have the startups ask is from Dante Perkins. I'll, instead of reading it from the chat, I'll probably ask him to ask the question on the metrics.
Sure. Hello, everyone. I just had a general question. Is there a metric used on how the Shelter Venture Fund invests in startups based on the standard triple bottom approach? As far as social impact, financial return, price, business value.
Yeah, we do have. I'm assuming, Dante, you're asking about how do we build the pipeline for investing in startups? Is that correct?
Yes. Looking at your portfolio, I was just curious as far as
Right.
there's a metric you use.
Yeah, so we have, we similar to what we microbuild, we have a scorecard that says every single of these startups, starting with the founder, how committed they are, what kind of a team they have built. Then we look at the innovation itself, and how this innovation is addressing our target market. We look at financial returns, like what are the exit prospects of this company. IRR and things like that are very hard to determine, right? But typically we look at payback period, we look at exit prospects. So that's the financial return part of it. Then we look at the social part of it, how many low income families it serves, how many women, where are they located, and whether it is in rural areas. And Mira, please feel free to add also, because we designed this scorecard together. So we look at it at several different dimensions, and then we use a risk scoring methodology to say how risky it is if they fail to reach this metric. And we are trying to use this on a more regular basis, because we are now doing many more accelerators, Dante, than we did before. So even when we ran the accelerator in India, we took all of the collective feedback of the 10 participants or 7 participants, the cohort, and we ranked them to say which were the ones that were very shelter focused and where we had domain expertise, and which ones had the most propensity to succeed. So now we are kind of doing that pipeline building with a very quantitative and a qualitative scorecard, but more quantitative, I would say. But Mira, please feel free to add.
Yeah, no, I think, that was quite detailed, Jyoti. And Dante, to your point of social impact, we kind of break it actually into 2 segments, right? One is the low-income housing focus, which is the core thing we want to look at, because the fund is set up with that mission, and there are no other funds that have this sort of a focus, whereas for general being green or other aspects, there may be other opportunities one can find. So that is the central weightage that we try to give on how relevant this would be to this target market segment, and to the even if it is only a part of the entrepreneurs, right, total focus, and overall sustainability, financial return, exit potential, and all of that, because we do have this 24 months to 5 years, as Jyoti indicated, as the return expectation on these investments, and we want to evaluate against that criteria and the investment vehicle we want to use for that. So, Jyoti, I had one question on, the fund was on the Shelter Venture Fund, right? It was started in 17, and after 11 investments, how do you see the reaction from the startups, right? How your pipeline is coming up, and the interest in the segment from other investors, right? How have things moved in these 4 years from the vantage of where you're sitting?
Thank you, Meera. I think very important question, right? 3 million is just a drop in the bucket. So first I will answer this question you've raised from investor perspective. We've had Hilti Foundation, who's tremendously interested in this, and because they've also supported Shelter Tech accelerators, right? These corporations are looking for really innovative ways to bring the gap of access to products and services to poor people, low income people. And so there's tremendous impact. We are growing the Shelter Venture Fund from 3 million over the next 3 years, 4 years to $15 million, you know? And so needless to say, there's a significant impact in interest or indication thereof from impact investors. From the startups themselves, I think we must look inward and answer question in a very honest manner, transparently. I think what we are doing better now that we could have done, let's say 3 years ago, is to really create this knowledge platform, you know. But we were also in a starting mode, right? So we were also like a startup. Shelter Venture Fund was itself a startup, so it was kind of building up its own skills. But wish we could have done that a little earlier so that entrepreneurs have the ways to really collaborate. And this is something as a feedback we've received, you know, from the startup companies themselves, that they learn a lot when they talk to other entrepreneurs who are in similar situation from each other on the challenges, but also on how best to approach their model. So there is certainly a lot of interest. We do get interest from a lot of entrepreneurs, sometimes not really focused on shelter, and which is why we have to turn away, you know, turn them away. But there has been a lot of interest that has been generated a lot more since the Shelter Tech accelerators have taken off, you know, both from the entrepreneurs, but also from the investors.
Okay, that's good to know, Jyoti, that, you know, things are moving in the right direction, and, you know, the fund is looking to expand and all that. So we are past 12, almost 12:10. I guess if there are any more questions, we can take it, or else I'd like to thank Jyoti for her time in, you know, sharing all these inputs on the impact investment space, and, you know, real life example of how things have worked out with both the housing finance fund and the venture fund. So I assume there are no more questions. So thank you all for joining, and thank you again, Jyoti, for your valuable inputs.
Meera, thank you very much, and thank you to the Brigade REAP team for giving me this platform to talk about our work. So really appreciate the opportunity.
Thank you, and
Thank you,
over
Jyoti.
to you
Thank
guys
Meera.
here, John.
Thanks,
Yeah.
thanks, Jyoti. Thanks, Meera.
Thank you all. Bye.